Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting with the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory. That's how does the market work? Why does it do what it does? And how can we get in alignment with it at times with structured, vetted trades? The auction is really participant behavior. The idea of a vetted structured trade is to have a statistical edge, and the process we use is overlaying these structured trades on a volume profile. Volume profile is used by many traders. It is a way to actually observe participant behavior. It is not an indicator per se, it is really an organization of information. And then based on how we define that information, it gives us an opportunity to create structured trade plans. And when we have alignment and an edge, it is time to interact with the other participants. And then like every trade we take, the outcome is random. But if we have a statistical edge over time, just like the casinos who only play games with an edge, we have the opportunity, assuming we can actually execute our plan, which means manage our emotional triggers and fear and FOMO and the rest of the things that are problematic for us. We have the opportunity to have a potential sustainable business. That's the purpose of TraderLab, and you're all invited to visit the TraderLab community, and there is no cost. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's get into it. Let's take a look at what's going on. Now, as you guys know, we have making new all-time highs. So there's a couple things that in this context, and this is what it's called, there's some things we need to be conscious of. So it depends. One of the primary pieces, and I would say the primary piece, is understanding market mechanics. So if the market opens inside of the previous day's range, we can anticipate certain behaviors. One of the things you may notice, and again, you have to vet this for yourself. I'm always going to say that because we're in an environment that's random. So there's nothing mechanical. What we are going to try to do anytime we interact with the other participants is to try to define the condition of the market. Now, the thing is, condition of the market is always changing in the sense because it's based on rotations. So one trader may just put a stake in the ground and let's just say go long, and they ride through all the counter rotations. Other traders are going to actually be trading inside of these rotations, and those are called fractals. Now, you guys think of it as time frames. I think of them a little differently, but the thing about it is it's an alignment thing. Now, some of you are very comfortable psychologically with, I call it subway purse snatching. 3 point, 4 point, 5 point, 3 tick, 4 tick, doesn't matter. Do you have an edge with it? And the actual edge is a statistical output. It is not a win ratio. If you have a very short target, you're going to have a lot of winners, but you may be a loser because of the stops you take, which we all do, and the overhead. So you could be a very high probability winning percentage and be a loser. So I think the idea of being in this business is to become a winner. In other words, profitable. So we have to always balance things, between risk and reward. We all know about that. So the TraderLab is about helping you design a program or a plan that's right for you. It's not what I do or what other traders do because everybody's different. So how do you find what's right for you? That's why plug and play typically doesn't work. You can, what I share in TraderLab is really to give you a process and a way to reverse engineer a potential strategy that can give you an edge over time. And then for you to find what psychologically aligns with you. Anyway, that's kind of what it's about. So we opened in range, and let's say on the edge of yesterday's value. So in range. So what does that do for us? Well, that means if we're opening in range and we have new all-time highs, there's a couple possibilities. One of them, and the primary one for me, is something called responsive selling. If you are long and you're having a great time, you had the party last night, the party favors, the champagne corks were flying, new all-time highs. You had a good day, maybe you didn't. But if you're in TraderLab and you followed the trade plan with an edge, you would have had a good day yesterday. Now, not everybody has a good day on any day because there's a lot of elements that come in. Managing your psychology is, I think, the toughest part of this business. Not figuring out how to trade, it's actually doing it properly and working on the emotional problem. So we opened in range. So what does that tell us? Well, if we open in range and the market is long, then we can get a rebalancing of inventory. And in fact, yesterday's stream, I really focused a lot more, and I try to cover different topics. So if you haven't seen yesterday's stream, you might want to take a look at it, because we sold off and filled the gap yesterday. And how do you understand or develop an understanding of why that might happen and why you might take either shorts yesterday on the gap or not take any shorts and wait to take the longs on the gap fill? You can do either, you can do neither. So that was yesterday. So what about today? We open in range, but up near the high of the day, the all-time high, yesterday's high. So statistically, and I'm just going to mention something to you, if you open higher, and means higher than settlement, inside of range, there is, and this is how you start using statistics, an 82% probability we take out either yesterday's high or low. Just saying. Now, if we know that, do you think yesterday's low was on the hit parade this morning or yesterday's high? Isn't that interesting, and isn't that important to be aware of the probability? Now, there's more. The ETH high, 76%-ish probability. And there's more. And then taking out the first hour's high, a 67%-ish probability. Past performance not indicative of future results. We're in a bull market. So we anticipate what? Responsive selling, profit taking. And then we have to look, we can take shorts subject to your plan in TraderLab, or you don't take the shorts, you look for long continuation trades. Which is right for you? It's a great question. So let's try to figure that out. Are you guys tracking? And by the way, if you're visiting in YouTube, thanks for stopping by, and please give a like. Hold on, guys. I have a little glitch in the force. Okay, there we go. Sorry about that. So let's go take a look at a little structure from yesterday. Now, what I'm going to show you is called a volume profile. And don't let it alarm you. When I first saw this, I was alarmed. So I'm going to suggest don't be alarmed. It doesn't do you any good. So, but let's look at the story. The story. Now this, so we made a new all-time high here. So the market went up. We closed on the low. What does that set up? Blow these guys out, the weak longs. Sell stops are under here. Down we go. And then at the end of the day, we close back here. So this says up yesterday. So we open up here, actually. We don't get over this high, and then we get that rebalancing of the inventory. And again, that's yesterday's stream. I talk about it, and we fill the gap. So yesterday morning, it was shorts to fill the gap, or in your Barca Lounger until longs to go with the trend. Okay, so that's your thing. Now, let's look a little further here. Let me show you a couple ideas. This is a low volume area. Now, what is this volume thing, right? Well, the way the market tends to work is it's a shopping experience. So I think about it, the way I kind of think about this is when you go to the store, being the astute shoppers that you are, you're actually a trader because there's a buyer and a seller in the store. except it's in slow motion. The prices don't change. We're at the opposite. Our prices are changing continuously. So we're at the opposite end of the spectrum, but the mechanics of the market work the same way. It's a price discovery process. So, but here's how it works in all fractals and timeframes. Now I'm just identifying a fractal here. This could be happening in a couple tick range even, but we're just going to take the broad stroke. When the market gets too high, it runs out of buyers. I'm not paying that. If you go to the store and the price is too high, you're going to have resistance. Now somebody's going to buy it, but the fact is, if we don't have volume and demand, we're going to run out of buyers, and the sellers, who are the other side of this, who want to sell this thing, are going to have to, the buyers move away. The sellers, the limit or passive side, has to be lowering their prices. So as the price is coming down, these sellers, now the thing about it is, if we run out of demand, then we may rotate back down and to attract the buyers. Oh, look, it's on sale. You throw a couple in the shopping cart, right? I'm not paying that. Yeah, but it's on sale. And then we find equilibrium. In other words, a balance between the buyers and the sellers, and that's a retail price. You go to the store, you see a retail price. Most of the volume takes place at a fair price, right? Yeah, I'll pay that. Everybody's buying their tuna fish at $1 a can. Okay, $1.25. Yeah, I don't need to have that tuna. Oh, 75 cents. Throw 4 in the cart. Same thing. Okay. Now, what's happening here is this is an auction. Now, if we leave it and we start a new auction, the language of the market or the participants are saying, this is too low. You should have bought more down here in the store. Now the price of tuna is up here. When we leave this distribution and we start a new one, it's a new auction. You notice they look exactly the same, except now we have separation. What was too high has now become too low. And now we start this thing again. And now we have high volume here. If it's too low, just like that one, we move away and we start it again. And this goes on and on and on. Okay? So, and it goes on in all quote time frames and fractals. Even that little thing, you see this right up here at the high of the day? Too high, too low, too high, too low, retail. Too high, too low, too high, too low, retail. This is called fractals. They're inside each other. Think of Matryoshka dolls. Now, this is the all-time high. Now, let's see what we can do with this. Are you guys with me so far? Now, I don't have a lot of time, if you will, to cover everything. So I try to isolate pieces for you. Anyway, I hope this is working for you. Please give a like, by the way, if you're visiting in YouTube world. I gave you the statistics. The context is up. What do we anticipate? Selling. Where's our high probability statistic? Yesterday's high. Do you feel lucky? As Dirty Harry says. Now, we're coming to the RTH open. Now, this is going to be very important right here. 590. Now, this is where order flow and, Bookmap really gives you an edge. You got to learn to understand it. You got to invest time in any high tier tool. This is not spaghetti crossing over, which is what most retail traders think trading is. This is really much more sophisticated, but it tells us something. There's a buyer here. Now, the liquidity comes in the book. Now, the thing to understand about this, and all we're doing is, this is the heat map, and it's showing us what's sitting in the limit order book. There's 646 sitting here right now, or at the time. Now, the thing about this is historical. This is what was there. And over on this side is what is here. So is, was. When we're in real time, this will be flapping around, but you'll see where it was, like over here. Anyway, so we get this, 96. So we know that's important. Now let's take a look. RTH open. The yellow line is the retail price. It's called the developing volume point of control. Now, what I share in TraderLab, and I attempt to try to help traders do, is create trade plans, understand the business of trading, which is really important. You understand what you're doing and what you're trying to accomplish here and the environment you're in. but also to build out trade plans with structured trades that are vetted. So it's kind of waiting for a bus. Where's your bus? Well, my bus might be different than your bus. Doesn't matter. That's why you have to find what resonates with you. So what do we know here? We're opening. There's the all-time high. We have over 98% probability-ish to take out either the ETH high or low. It could be either one. And an 82%-ish probability to take out either yesterday's high or low. Considering we're opening here, I don't know about you. I'm inclined to think about this one, aren't you? So now, if I know the market is long, here's the possibilities. I can open, I can get continuation buyers, and the breakout buyers or the FOMO buyers, oh, it's going to the moon, I got to get long. Well, often, and most often, what most impulsive traders do is they get run over because it's an emotional response. It's not a business or a planned response. So when I'm looking at this, I'm going, okay, what's happened, and it's the open. So I'm going, what's happening? So I'm waiting because I want to see if I can get buyers in here, and I can't go anywhere. Then I know the longs that come in early, their sell stops will be below the market. And I also know that some of those who are long from yesterday might also take profit. So my thing, and this is not a recommendation, is I was looking for shorts. Now, it is contradictory because the context is up. So when I'm looking for a short, there's two ways you can do this. You cannot take any shorts because the context is up, or you can move into a shorter time frame. Remember I said fractals? So I can be short while you're getting long. I can be short to take advantage of profit taking and then turn around and get long. Or I can skip the shorts and just wait for the longs. You see what I'm saying? And I'm giving you these alternatives because that's trade plan specific, not mechanical. If you understand market mechanics, you might be going, well, I have a high probability to take out yesterday's high, but what's going to happen to the people that are buying high? The old saying, buy low, sell high, right? Well, the opposite is sell high, buy low. So here's what happens. This is the RTH open. Full session VWAP-ish was around here. Developing volume point of control. This is your shopping experience. This is the retail price, remember? And if this is too low, this is retail. Now up I go. Let's watch. VPOC migration. What's the language? The language is too low. I want you to follow very closely. Now, I'm going to be describing things here that if you do not understand, which most traders don't, this is market mechanics. And instead of using indicators, I'm actually reading order flow and the behavior. There's more volume here, and this is what created it. And don't forget the market open, this starts at 0, than there is here. Because there's not a lot of time we spend at this level. We're now spending more time here, so it's logical there'll be more volume. And you can see what happened here. Too high, too low, retail. If I move away and there's more volume here, too high, too low, retail. So the shopping experience, what you're seeing is too low, retail. So we're going up. And of course, Tom is going, That's what I do. I go, So this is my new retail price. Now, and don't forget, 96. There's also something else at 96. I got to point this out to you. 96.25 was settlement from yesterday. So we have you might call it a internal gap, right? And to get back to the previous close is around 73%-ish, which is right there. It's covered up, but it's right there. So I know I got settlement and this guy's floating in the breeze. Why is this sitting here? Great question. Now let's look above us. I got this up here and I have a high probability target and I have the ETH high. All this is very high probability, 82%, 98%-ish. You have to vet these for yourself. So I'm, of course, concerned. And the all-time high. What's my concern? That's just going to keep going and I'm not in it. What am I feeling? FOMO. You shoulda. Well, no. But Hyde, the lunatic who resides in my head and is emotionally triggered only with the benefit of hindsight, is experiencing FOMO. So I feel FOMO. I'm going, you shoulda. Great. It's always nice. That voice in your head after the fact, brilliant. See if that voice in your head can actually do the right thing at the right time. Usually not. Because when it's the right time, you're fearful and you don't do it. And then it's not the right time, you're certain. And that's when the risk is higher. So, too low, retail, going to the moon. Watch. Uh-oh. What's that? Too low, going to the moon, break low. This sets up a short for me. Let me show you. So, let's come back. What was too low? Right there. I got VWAP, I got mid. This is called the high volume node, and this is a low volume node. Remember, too high, too low, and you don't know, by the way, too low, retail. I'm not paying that. I'm getting in the car. I am leaving the store. Well, where was it too low? Right there. I'm going to put a little line in here. Let's just see what it does. Too high. Break high. So right here, this is my resistance. This is a short. Stop is here. Where am I trying to go? Down here. VPOC migration. I'm not paying that. I'm not paying that, Tom. I'm really not going to pay this. Really? Really? This is support. So for me, the shorts are here. So I was taking shorts this morning. And there's times, I ask myself, why aren't you just taking longs? Well, why wouldn't I take a short if I'm anticipating responsive selling? Now, in the TraderLab, the idea of this thing is not to take a short, subject to an edge. Your job is alignment. If you're in the TraderLab, you would be looking at this, and if you're saying context is up in the higher time frame, north, then what are you going to do? You're going to skip the shorts, and you're going to use the shorts to get long. But what do I know? I know I got this, and I have ETH low. All right. Did I get my ETH high? No. Did I get yesterday's high? No. Target. And I was posting in TraderLab this morning. I said, if we can clear this, then we can get the ETH low, because I have over a 98% probability of getting one or the other. And I have this. This is the highest or retail price from yesterday's RTH. Theoretically, we can check this price, and if it's still too low, we can go up. But what is the other statistic? I know you didn't forget this. Over an 82% probability, we take out either yesterday's low or high, and given the condition of the market, I'm leaning here. So I already know if I'm trading shorts, I can come down maybe out to here or out to here. I don't know, and then I want to be looking for longs to fulfill the statistic and go on our merry way. That's basically it. But I don't know right here what's going to happen. So I post in TraderLab, we got to be aware of this thing. And it's settlement. So that's a statistic. It has over 70% probability. All right. Let's watch. Now, let's remember, where's our variable high volume node? It's there. Here. So what I do when I mark these things, we're shoppers. Traders are shoppers, and we're in these short-term rotations. How does the market work? The market goes up. I was getting a question about market rotations this morning. How does this thing work in all fractals and time frames? It goes up to go down. It goes down to go up. It goes up to go down. It goes down to go up. It goes up to go down. It goes down to go up. Why does it do this? Because there's buy stops here. There go the stops. You can see them. We come back to resistance. Why might it not go above this? It was too high. It's right there. This is like going to your store and you look at the price and you go, I'm not paying it. Okay. Where's too low? And you notice this yellow line moving down, shopping too high, retail, going to zero, except break above it. Where's my resistance? It's right there. Notice where it comes. Resistance, break low. Resistance, liquidity, target. Now what? Come across, break high. So now the question becomes, are we going to take out the opening swing high, which is this? And of course, who knows? Let's see. So I was only on me. I'm only talking about me. I'm not saying anybody should do what I do. So we come across, and now we break out this way. There is our 80%, 82% probability. This trade here, right here, this sets up the long in here. This is your resistance. So I know I've got sellers here. There's the icebergs. Sellers. I have absorption here. So the green bubbles are delta. They're saying there's a seller here. Why did we go down? Great question. So let's look at this. I'll take you now into a microstructure. Now, nobody knows anything. See where it goes? Isn't that interesting to you? But let's look at this. Icebergs. And what's really important about order flow in the limit order book is when you have resting liquidity. Because what you don't know is, do they really want to trade, or are they just flashing here to fool you and then they cancel? They pull or they flip. So you could have this here and it gets retail buyers in, and then this disappears and then this flips the other way, and that's not so good, right? But we don't know. What I do know, this is settlement and it's a target. And then I don't know what else. Don't know. So right here, I've got my absorption. There's my icebergs. No clue. I've got my buyers here. My sellers are here. I'm going to show you something nuanced and it's somewhat advanced, but it's all fractal. Remember Russian dolls, Matryoshka dolls. So right here, it's the same as this. Chop, 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 chop. Too high, go down. What's this? Right here. Same thing. Resistance. Too high, go down. Chop, chop, chop. Too high, go down. What's this? Support. Either the sellers, it's like Pac-Man. The sellers consume the buyers and we break through, and then it could be a short for continuation, or the buyers consume the sellers. The sellers are there. Location, clueless. Break high. Now, let's look at this. This is where the volume is. You could see this. This is a fractal. Too high, too low, retail. You're now down the street in your convenience store. You guys know about that. What does it look like? So what do I know? Remember, not what will happen, what might happen. Sellers are here, buyers are here, and either we're going to do one of these, come back here, continue down, or do one of these and come back there. Then if you come back here, what does that say? Too low. What does this say? Outside edge of the shopping experience in this store. The sellers were here. The buyers are here. One side's going to give up. What's the trend? Up. What are my statistics? Yesterday's high, ETH high, et cetera, et cetera. So right here, when I break here, breaking this, now I know this might be support because I left it and I have this. So pull back. Now, right here is a potential long, and the idea would be to come across the range and squeeze out the shorts. Who knows? Watch. So that's a long. And where are we trying to go? Here, out the top. So in TraderLab, if you did not take a short, which is Countertrend in my book, but I'm okay with that, no problem. I mean, it's only a problem when you take a stop. Otherwise, it's never a problem, right? So this was the first long for those who are aligning with the trend. All of this is Countertrend. So you can do either one, none, whatever, up to you. Now, what happens here? If you get long in here, you got to scale ahead of this, because then you're going for the opening swing high. You get through there, you've got this next target. Now let's watch. So we pull back inside. Now what you're seeing now is distributions of volume. And when the market consolidates, it does this: too low, too high, retail. I'm not paying that. Too high, too low, retail. Too low, whatever it's doing, it's doing. So up we go. So now, subject to your plan, you could be done with this thing when we take out yesterday's high. But there's more. We have structured trades. Let me show them to you. Now, this is interesting. I don't remember. Oh, yeah. This is our new retail price right here. There it is. I'm going to label it variable high volume node. This is process, okay? Now, remember, I don't know anything. I can't predict anything. I know nothing. What I do know is my liquidity is stacking here. Remember what was going on down below? 96, liquidity. And notice they pull, and now this comes up here. So I have micro high volume structure here. Sellers are here, and I don't know. That's a trigger. My resistance is right at this high volume node. I'm going to draw a little line. So before we ever come back to it, before this, we know right here, there's a trigger. There's a test. There's a break. There's a test. It's right to the high volume nodes. You see how this might work? And now I see this. I see sellers, passive sellers lining up. Does that mean maybe, and see the icebergs, maybe we have a short sitting up here? I don't know. So what do we get? We pull back to the VWAP. Now I'm looking at this and I'm thinking to myself, well, I can sell this to come to mid and VWAP, or I can buy this to come back here. I got either way. Doesn't matter, because this is too high. This is the VWAP, and we know in an uptrend it's possible to get VWAP buyers, and there's somewhat mechanical buyers. Resistance is where? Here. Sets up a short or an exit. It's like you could take this to there, and then you're holding for whatever. But this was too high. Liquidity is here. It sets up another short or not. Now, where do we come? 96. I think I posted in TraderLab. I can't remember, but I had a short on down to here. And I'm thinking, well, we got our stats at the time. Maybe we just trapped some longs, and now we are going to take this out, and these guys are going to pull. But what do I see? They come back in again over here. This is still here. So I took a short, and I'm trying to get under here. Part of the thrill. Where do I come? Here. What is this? Support. Where'd it come from? Right there. Let's watch it. See where it goes? Too low. What was too low? too low. Where's my liquidity? Here. And by the way, no clairvoyance, no clue. Why? I know my buyers are here. I also know they could pull, right? So what do? Trade management. I come back here again. They are still here. And what happens here? I get my support. It's 9:18 Central Time. At 9:30 Central Time, we have something called the IB stat. Let's go back to our statistics, and these are available to you in TraderLab. Taking out the first hour's high or low has 98% probability. Well, which one is it going to be, Tom? Well, my buyers are here. This is too low. And I'm in a bull market. What do we do here? And now I get VPOC migration. Now I have more volume there in the developing daily time frame than I have anywhere else. So what does that tell me? Let's look at the language. Too high? Too high? Right here. Let me mark it for you, just so you don't miss these things. Too high, and I'm below it. See? Retail. Let's mark it. Variable high volume node. They're all the same. I'm tracking the auction, and the auction is where this high volume is. And since we're trading in multiple time frames, but for me, there's no clock on this stuff, it's fractals. That's the difference. So what do I know? Too high? What was this? Retail. If I get below it, too high. What about this? Too high. What about this one? Too high. What about this? Shifts down. Support. Too high. If I break low, next support level is here. There it is. What about it? Break above. What does it say? Maybe too low. Still in there. Now what? Resistance. See, the sellers were there. Sellers are here. And what's happening? I'm getting above it now. So that suggests warning Will Robinson moment. VPOC migration. Too low. VPOC migration. Too low. VPOC migration. Going north. Now this, I posted this in TraderLab. Now this is a bit different and very advanced. I'm going to talk to you about it a little bit. But the thing about trading, I'm going to say it's not mechanical. I know we all want it mechanical. We just want a red light, green light. I know. I'd love it myself, but I never figured that out because it didn't work for me. So we all have winning trades, but that doesn't mean that we can be profitable because everybody has winning trades. It's not the problem. The problem is consistency and an edge. That's the problem. So we can have winning trades and have a losing process. That's why you have winning trades. And if you're still not profitable, that's because you don't have an edge. You just have randomness. And it took me a long time to figure out what the problem was. It wasn't the winning trades. It was taking the trades that win randomly that don't have edge. So I'm still a loser with them. Though they look really good. I just got to make them better. They didn't have an edge. I didn't understand any of that early on. This is a long. Now, typically, we would not take this trade. And if you're a developing trader, this is an extremely advanced concept. What's happening here is don't forget what happened here. Absorption, the buyers, see the icebergs. So, and this was my retail price. If this becomes too low and now it shifts up, what is it telling me? Too low, too low. You get your mid and VWAP sellers. Where's my support? It's there. So if I took a short there, which I wouldn't do because of this, this is my obstacle, this is my obstacle, and that. So there's no short. So once I get this, it's doing different behavior. In other words, it's changing. VPOC migration. VPOC migration. Too low, too low, too low. Retail. Here's what I can do. I can buy it there, or since I know the market is short, remember the market goes up to go down, and I'm in a bull market, what can I do then? Well, stops are sitting right here. Is this a strong high? No, this is a weak high. It's almost a double top. And at 9:30 my time, I have something called the IB stat. What is the IB stat? Almost 98%. I take out either the first hour's high or low. Given all this, given this, as Dirty Harry would say, do you feel lucky? Well, do you? This is a long for me. Now, where's my resistance? Here. So if I get long here, I got to scale there, and then I'm looking for the first hour's high, which I think is here. It comes in at 9:30. Is everybody with me so far? Now, this, not necessarily anything you ought to deal with, but if you get long here, you're going for the IB and then out the top. How we doing so far, guys? Now, this is an advanced TraderLab process right here. When you break, this is a order flow trigger. And I believe 6410, let me just check 6410 is the IB. So we have, remember, 98% probability to take that out. And then we have another structured trade in TraderLab called the IB continuation trade. So we are outside of yesterday's range, new all-time high. Happy days are here again. And now we have another structured trade. So if you got long here or down there, but let's just say here, you got to scale, and then you're looking to come out the top, or you don't scale. You're just going on the stat because you're aligned with the context. Now, this is a continuation trade, or it's called the IB continuation trade. It is specific to the contextual alignment. Here's the liquidity. This is a liquidity trigger. I've covered it in some of those 60 PDFs that I've shared in TraderLab, but this is another element, and it's more advanced because it's order flow oriented, Let me show it to you. So what do we know about liquidity? That's why when I said we were down at 96, if we broke below it and we tested it, it would be a short. We didn't. What do we do here? Here's the liquidity on the other end. We break above it. Now that's different. I get a buy sweep, and that suggests to me a counter rotation. But I have this. This is a structured trade for me. IB continuation trade. This is your entry. Your stop has to go, under here or under here, wherever you want to put it. Here. You got to get risk neutral. Now let's watch. Notice where we come. Liquidity comes back in here. We get under this. So you would be risk neutral. Your stop should be under high volume. I tend to go one node out. And here's what it is. This right here, this chop, 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 this is an auction. What happened here? I had sellers here, and I have my buyers here. And if that little node that you see to the right, this is our retail price right there in this auction. If I break above it in the little store down the street, this is too low. And then I move to a new level. Chop, chop, chop. Too high, too low. I break away. I actually have a long entry here. If I come back here, I can potentially have an entry here. I break below here, depending if you have your stop under here, you're fine. If you keep your stop here, you're going to have a scale, get taken out. And then what happens here? Break high, VPOC migration. What is this? What's too low? It's here. If I get long in here, my stop goes under here. I'm not, and that's not a recommendation. You have to vet it. So if I got long in here or here, my stop is under there. My resistance, let me take it from the other side, because what I'm doing is I'm bracketing the behavior or the fractals. So the high volume is in here, right here. So if you're taking longs, the way this would work is, so here, so this is a potential long here, right? Continuation. Sweep suggests counter rotation. High volume shows up there. Who knows? So if you're taking longs here, you're going to try to come back here. You get stopped out and you took another long, you'd be coming back there. You can't, and then the liquidity comes in. If you can't get in there, get through there, I should say, and you have the IB, which is down here someplace. Where'd the IB go, guys? I got to find it again. 64.10. So right here's the IB. As long as you're above this, you're doing all right. So if it pulls back here, you have another IB long, and that's your resistance. So if you took this, and this is also mean reversion. This for me is a legitimate trade to get long out here to here. And what you're doing is you'd be going outside in to the outside and then up. Okay. So at 10 is this IB. I'm going to just label this thing because we need to be conscious where it is. I think it's like 10 and a quarter. Let me just throw it in here because this is an important piece. Now, if I get below, see the support? If I get below and the outside edge, low volume node. So this is alignment, and this is called mean reversion. Underline mean, outside in to the outside. If I don't get through this, there's trouble. So if I break down below this, it sets up something called the IB failure, which is another structured trade. Now, there's a problem with it. The problem is it's countertrend. So if you're a countertrend trader, in other words, you have an edge, trading long, short, standing on your head, you can trade this. If you don't have an edge in countertrend because you haven't countertrend because you haven't vetted it, then this is an exit if you're still long. Or it's a short if you understand what's going on. Or it's just an exit. So let's look at it. I'm going to show you a couple different ways to play this. So supports here, resistance there. If what I want to do is stay above this and definitely not come under here, I break. Now here's the IB. What does it tell me? Too high, too low, retail. If I break below it and I get under this low volume node, then the possibility is to take the longs out that are long in this leg. Let's see. I haven't seen any of this, so I'm trying to think if I would be able to trade this. This, I'm going to say I could trade this. I don't know if most TraderLab traders would trade this. What I know is this is my retail price, and this was too low. This is the IB failure, I call it. And it's a mean reversion trade. What it is, instead of getting long to revert up here, which is what the longs were, if I get below here, it's the opposite. I'm going to revert the other way. And then the potential target is this, because this is the last retail price. So what it tends to do is, if we find too high in a fractal, which we don't know until hindsight, and then this is what the retail price is. So in a fractal, too high, and this yellow line is the same as that, except this is in a shorter time frame. This is for the whole day so far, and this is what's happening right here. Okay, so I'm doing the same thing, just in different time frames. So this is a short, and this is the target, and then that's that, and then it's trade management. We're back inside the range. Now we are in a bull market. This liquidity just jumped in. We have to see what is going to happen. What I tend to do, and I'm not saying it's a good idea or anything, is I kind of trade levels. So if I get in here, now here's my choices. I could just take a short. Here actually is the entry. There for scaling, because this is support. And then I'm either going to fall out the bottom, who knows, or revert back to there. We'll see what it does. I don't know what it'll do. That's not my job. I don't know that. I'm not blessed with being clairvoyant. but I do understand how the market works. And what I attempt to do is get in alignment with it. So here's the choices. You could sell the IB or you could get long here. Either one. So one of them is Countertrend, and this could be a continuation trade, and it's called mean reversion. You'd be coming back here. So you have the choices. Now, this is a problem. This, either the buyers have to take this on and get through it, or we're not going to get here, and then we're going to take these buyers out in this leg. I can only tell you what it might do. I cannot tell you what it will do. You guys have questions? It's making some sense. So here's what you got. You have Countertrend to there, and then, where's it going? No clue. You have outside, and if you get through here, you're coming here and there, actually. There, the outside edge of this, and then potentially back there. It's called mean reversion. So outside, and so if you're only taking longs, you'd be looking at a long right here, and you got to get out scaled in front of this, and then you're looking for this and maybe out the top or not, but this is where you're trying to go, there and there. Okay, so the long would be there to there, or the short would be there to there. Why, you're asking? Good question. Because this is too high, this is too low. Support, resistance. Going down in time frame, fractal, too high. So I can lean here, and I can come here. That's what I can do. What do I know about this? This is resistance. What's sitting there? That. If I get long here, I've got to be thinking about where the sellers took over, which is here, and now that's in here. So I got to scale ahead of this, and either I take a stop or whatever happens. These are not trade recommendations. I'm clueless. It's random. We all take stops. You guys have questions, and thanks for your patience with this. This is just trading. There's no holy grail, guys. There was. We'd all have it. So let's watch. How are we doing in YouTube? Please give a like if you're finding this interesting. So let's watch the behavior. So we want to see the behavior here. And if it keeps going, then we can come out the other end. All there is to it. Where were the sellers were here, buyers took control there. That's your support. Right there. And you can see the little microstructure here. In this fractal, this is too low. Put a little line on here for you. In this pullback is where the buyers took control. So the question becomes, are the buyers between here and here going to step up, or are we just going to fall out the bottom? No way to know. So let's watch the behavior. Resistance is sitting there. So if this holds, we need to get here and get back there. If this fails, then the longs in here might have a problem. And again, these aren't trades. This is just market mechanics. So let's watch microstructure. Here's what we don't know what will happen. So that's not what we can't do anything about that because it's random. What we can do, if we understand the mechanics, we can get a sense of if the buyers were here, this iceberg was a buyer here. That created our buying, which created our rotation. We know this is too high. And now we're taking this out. So if you, for example, if you took a long here, you would be getting entry in here, subject to how you manage your trade. You'd either be risk neutral or take a stop. I can't say what you would do. I know what I would do. I tend to get risk neutral. In fact, I do get risk neutral. And when I don't, I take a stop. Just the way it is. So now this is important. We have a sweep. Now we want to see often after a sweep, and it's often, not always, we get a counter rotation. So let's watch. Now it is possible that we're going to take this out because the liquidity at 96, where did it go? The buyers at 96 are not so much. Now we have buyers sitting here. So we have to see what happens at this liquidity, and do we get a bounce off it back here, or do we just keep going? And now all the longs that are in here, under here, do they get thrown under the bus? So let's watch. When you see liquidity come in the book like this, it either the market's going to trade up to it or it's going to see it and it's going to respond. Notice this. They added, got the reaction, pulled. And this is on the other side. So what happens here? Buyers are here, buyers are there. Let's see if there's a reaction. Now, for me, I have nothing to do here. I just go to Barca Lounger and hang out. We can revert here, but I have nothing to do. I'm just hanging out. You know, the idea of this that I have found in trading is not to trade a lot, but to be very strategic, because risk is risk. The more trades you take, the more risk you're taking. And unless you have, you know where your edge is, you don't want to, at least, again, I'm only talking about me. You don't want to put risk on for the sake of action. You want to put risk on when you have edge and when you have potential for range. So what I know at the moment is we have longs in the market. Their stops are under the low of the day. Do you want to get long when you have the low of the day here? Or do you want to be thinking about getting short somewhere out here to come down here? Or the other choice is you don't do anything, you just hang out and you wait for more clarity for the trades that you have vetted. And if you don't have a trade, you just don't do anything. You just hang out. There's our liquidity. There's our absorption. That's absorption. So now the question becomes, if we have absorption here, is this our support? Or do the sellers take advantage of these buyers and sell and then consume them? Pac-Man. Let's just watch. So when I'm looking at this right here, that little high volume node. I'm looking at this liquidity and that the sellers came in here and these buyers consumed these sellers. You see these sell stops coming out? Well, who's buying? The icebergs are buying and they're taking the liquidity. And that high volume was right here. I have a little trackball here. And sometimes I think maybe it'd just be easier to use a mouse. This is the support, right? And where's the resistance? It's there. And, you know, going up the food chain. This is the outside edge. So if we do one of these deals, we can do this. So we had our buyers here. We have our sellers there. So now either we're going to hold this and continue, or we're going to fail and take out the stops. Now, for me, getting long is high risk because of the stops. If the stops come out and I don't get selling below here, I can come back inside and come all the way back across the range, actually to wherever the VPOC is. See how it held the support here? Now remember, we're thinking about this, aren't we? Let's see what it does. Now, I don't, for me, this is not my kind of thing, you know. This is trigger, okay? This is okay. I can take this and I can, because of this, these are all structured triggers, but I have to be cognizant of the sell stops. So it's just a thing, you know. What am I going to do here? Well, I may not take this trade. I can't tell you what I would do. If you're a developing trader, I perceive this as having a lot more risk to it because of the stops. So, and here's the other way to think about this. If more traders are coming in here, there's stops under here. Now there's going to be stops under here. I know the shorts are in this leg, so we can rotate into their stops. But if I run out of buying, wherever it is, then I can attract my sellers again. And now I've got sell stops here. So I know I've got that. So I have to always be thinking from both sides. So if I get long in here, then I've got to be thinking about, well, I got my mid and my VWAP. Where's the stops on the shorts? Mid and VWAP. It might come back there. But if I can't, and where's my low volume outside edge? Where was it? Right there. Right there. Let's look at it. You can see where it says LVN, low volume node. It's on sale. I'm not paying that. Remember, where'd we go? There. Do you think we're going to come out the bottom? So this is a trade management opportunity or a long to there. Or it's a short to come out the bottom. Which one would you be taking? What do you think? So let's watch. Outside edge, sellers here. Outside edge down here and stops under here. So if you're taking longs, you got to deal with this. If you're taking shorts, up to you. This is your outside edge, and you're coming back here to potentially come out the bottom. Either one, it's up to you. Not up to me. You're in an uptrend, you might just take longs. If you trade countertrend, you take both sides. Which one of those has an edge?
We have sellers at 6,400.75. Yes, sell size 1,000.0.
Are you guys with me? I'm not saying you should trade like this. What I'm saying is you need to learn to anticipate the behavior and where it might happen. You can't predict it, so that's not that's not part of it. Okay. It's understanding what creates levels, and can you recognize where something might happen, and this is where it might happen right here. So, so if you took a short, that's up to you. And why might we do it? Because of this. If you took a long, you might do that also. You see? But you have to come here. Either one can work. So we'll see how this resolves. The way I look at this stuff is I don't know what it's going to do. I don't. I know I've hit my targets on the upside, and I know my market is long. And remember this concept. The market goes up to go down, and the market goes down to go up. The market goes up to go down. Maybe that's down or that, and the market goes down, which it did here, to go up. So right here, we're either going to go this or we're going to break. And if we break, then we're aiming for this. Let's see what it does. Look at this thing, this iceberg. This one, I think this one here had too much coffee this morning. So this iceberg is showing their intent. Look, it just jumped down. You guys have questions? How we doing? How about a like if you're visiting in YouTube? By the way, the TraderLab is a community of like-minded traders who come together to leverage their collective experience. What I do is provide some guidance. I've been doing this 46 years, and I've trained traders and sat on trading desks, mentored and coached traders. So I understand the problems, and especially because we all have the same problems, especially psychological problems. They're the biggest obstacle for sustainability in the business is not learning how to trade. I believe you come to TraderLab, you can learn how to trade if you do the work. The problem is overcoming your fear and the uncertainty. How do we know if we get long? Should we be getting long or short? That's one question. The other part is the only way you know the answer to what you should do is your plan. Do you have an edge getting long here, or is the better trade to get short to get the stops that are under here? Isn't that an interesting question? I can tell you for me, well, I'm not going to tell you for me. I'm going to say is I trade both sides. It doesn't matter. What I know is this is my outside edge. If I can't get up over this high volume right here, and this is my outside edge, this was too high, then I can come out here. If I come out here, I've got sellers under here. That's what I know. So the market is long. And how does the market work in all fractals and time frames? The market goes up to go down. The market goes down, go up. If I only go so far and I meet my sellers, then the market goes up to go down. And I can't tell you which way it goes. If I knew that, I'd save some stops along the way. So I don't worry about it. Do you want to be long or do you want to be short? Me, this could be a trade management opportunity to cover. This could be another short. Doesn't matter. Or you're hanging out short from up here and you're in your Barca lounger and your teeth are chattering with the rest of us. You see, because it can do anything. I hope that makes some sense. We need to accept we're in a random environment, that we have no control over what the other participants do. We don't control if a tweet comes out or something. We don't have any control of that. Look what we know. We know the absorption was here and the buyers were here. We know the sellers are up here. That's what we know. So now we're in a really kind of a chomp thing here. So let's see what happens. Buyers are here. And look at this thing. You could trade from either side in this, but you always have to be thinking about it where the obstacles are. When you get a sell sweep, by the way, the possibility exists for the counter rotation. It's the same thing as when we see the buy sweeps up on the top. It suggests rotation. Here we have a sell sweep. We don't get it. Sell sweep here. We get it here. No way to know. So let's see what we get here. Do you have any questions? Post them. Well, Ben, you say you created an edge and now it doesn't exist. Well, then maybe you don't have it sorted out. If you have 100 trades sampled, then there is an edge if it's done correctly. The thing about edge is there's a qualification of context. We know the context is up. So the edge goes to the longs. The shorts are counter-rotational trades. I mean, that's all they are is, counter-trend, I should say. So even if you're taking a short here, it's still counter-trend. We know the buyers are here. And if we get under here, we come out the bottom. If we can't get under here and get out the first hour's low, then we come back the other way. And this is not necessarily a trade, that anybody can take unless it's vetted. Now, for me, I wouldn't be doing, what am I going to do with this? So let's see what happens when we come back up to the liquidity up here. Remember, the higher time frame is up, so depending on how everybody operates, you could just be taking, continuation longs and not mess with the shorts. Use the shorts for trade management. So when you get a short trigger, you just get out of your long, and then you're just going to take longs until it fails. Or you trade two sides, and you're going to be taking both sides. But the shorts are not in alignment. I consider them counter trend. Now, I trade both sides, so I can deal with that. But the edge is alignment with the context. That's an individual thing. You'll find, I believe, that it's not about taking a lot of trades and catching every of these ripples. It's really about the patience to wait for outside edges. They are predefined. So now we have VWAP up here in mid. We'll see what we do up here, but notice the liquidity. So you want to see the reaction of price to this. Remember, these guys had no intention of trading. They came in here, and that's pressure. They pulled, and now we're getting the liquidity coming back in. Let's just observe this behavior and see what happens. Now, this may pull, but if you get a trigger and you see this press, then we might see a counter rotation. Let's just watch it together and see if we can recognize any behavior. And again, it's random, and it's not a trade recommendation. It's just, see this is algorithmic behavior. That's like stepping on a banana peel. We're in a separate business from them. We're not competing against the algos. We're like fish. We're all swimming in the same ocean. And we are the minnows. There's more liquidity up here than there is underneath. This is pulling. If this drops down, it can create rotation down. Let's just see what it does. What's interesting about this is the trend is up. So the context is up. We're back at yesterday's high. Stops are sitting above this swing. So this is vulnerable. And if we pop up into these stops, we want to see the behavior like in this consolidation. So the sellers are here, the buyers are here, the stops are there and there. So the potential is to come up into the stops, and then we want to see what happens. And it's not recommendations for a trade. Really, what it is observations. Because when you have alignment with elements, then you can anticipate a location to trade if it meets your qualifications. So we're going to watch this. It's not a trade recommendation. We want to see what happens with this right here. Let's see what it does. Andrew, I don't use the CVD. It's too lagging for me. I do look at this. All right, the delta. This to me is very important. So if I have increasing delta and markets moving up, that's all good. When I see increasing delta and the market is moving down, that tells me absorption. So right here, you see this is selling is happening right here. So I can see the market is going up, but where's my buyers? They're being absorbed. That's all. So now this can set up a potential rotation. Now, is it a short? No clue. There's a high volume node there. The outside edge is here. Stops are going to sit here. So there's nothing here. You can just read it together. No, I don't use CVD. I mean, this is down here. What's it telling me? Is this all selling? And that means what? I get short? No, it doesn't. But what about this? There's a lot of selling. Now, how far do we get on this selling? Do we get more selling, or is this absorbed? I've got a buyer right here at this liquidity. So either the sellers are going to consume this buyer, or the buyer consumes the sellers, and then we're going to move off it. Let's see what it does. I don't know what it's going to do, so it's not for me to say it will do this or that. I don't know what it'll do. I know what it might do, and that's what it might do. And this guy wants to buy more. You see this iceberg? When they sit out on this side of the white line, they're basically saying, hey, over here. Icebergs are there. Icebergs are there. This is still sitting here. And so that's a buyer. Passive. So what happens here? Do the sellers? It's Pac-Man. So here we go again. There's the iceberg. Let's see what it does. Buyers, buyers, buyers are here, and we got this sitting here, okay? So let's just watch what happens.
Iceberg, yes, by IC 500.
They executed, and we're under this. I have nothing I can do with this. I know we're very two-sided now,
Yes.
and I'm seeing a lot of iceberg activity here. A lot of buying icebergs going on. So we had a buying iceberg here. Now we have more buyers in here. I have nothing to do. Easy to lose a substantial amount in this because you can be chasing it around. This is where FOMO will get you. You know, it does this, you sell it here, and then it comes all the way back. So it's very important if you're going to be in this business, not to respond to FOMO and, oh, I'm missing it and all this, just to be patient and wait for your trade. The thing about this is anticipating the trades and knowing where your trade shows up, and then you're already ahead of it. You know when it comes to an area, whatever it is, that you're going to observe behavior, and then if you get a trigger, you know, then you do your thing. And if it doesn't do what you think, there's nothing to do. You just go, wow, what's going on? If it's not your trade, there's just nothing to do. I try not to take a lot of trades because the more trades I take, the more risk exposure I have. And my plan is more of a larger rotation scenario. So when things work well, and I don't have to have a lot of those, it takes care of the stops and it creates potential profit. Doesn't happen every day, but happens a lot. So that's my orientation. I'm not looking for action. I found that just doesn't do anything for me. I only have a certain amount of cognitive, concentration available. And at some point there's fatigue, and it's easy just to make it. Doesn't take anything but a moment to make an error. So I prefer to put a trade on and just let it do its thing. And if it's not broke, you don't have to fix it. So do you want to be short or do you want to be long? Which is it? So where's the stops? Under the low. So which one is it, long or short? It could be both or it could be neither, you see. So I'm going to say for me, there's no trade in something like this. Unless you're a scalper and you have a specific plan that once you've identified behavior. But what do we see here? Notice the aggression of the buyers. And are these sellers aggressive? Not at the moment. See what I'm saying? So how do you prioritize? Do you want to just be a buyer? And where would it be? It looks to me like the buyers still are driving the bus here a bit. And that's not meaning anything more than because it changes moment to moment. If we get a heavy seller and this thing blasts off down here, then it's going to negate this. At the moment, it hasn't. So let's see what it does. And what is this? Too low, too high, retail. Retail, this is where the buyers came. Outside edges there, right there. See this low volume node? It's right there. So when you come down, you're actually checking this. And if this is too low, then you can rotate, and maybe come back here or here in this, because this was too high. So this is a fractal. So it's like there to there. I don't know if I can't, not saying I can't. I'm going to say it's not my thing. I want the range because I can't enter there. By the time I'm conscious, I'm getting in here or maybe even there. Just depends. And then I know that the sellers were right there. So if I get in here, I got to be scaling here. Right there. Right ahead of that. I'll put it right where it says HVN. If you get long here, this is your resistance. And the thing that gives me a little sense of the long so far is these buyers. And who are these sellers? Seems to me the buyers are still driving the bus. What do you think? How about a like if you're visiting in YouTube? Help support the stream. There is no cost for TraderLab, so likes are what support the TraderLab. It encourages Bookmap to keep it available at no cost. So we think that might be a good thing. Here's what I want you to observe. This. Doesn't that tell you something? The urgency of it. And then this coming out here is potential long. If you got long here, remember this is where you got to deal with your resistance and then wherever, then it's trade management. And where's the stops? Let's come back. Stops are above there. Stops are above here. These are swings. Where might this, notice where the liquidity is. We still have to be conscious of this. So, if that's your thing, I'm not saying it should be, but because this just isn't, this is workable, but for me, it's just not my thing. I can read it, I can trade it, but I also get caught just as well, maybe, taking a trade here and getting run over. But these are counter trend. Remember, the shorts are counter trend. The longs are with the trend. There's your resistance, and your stops are there and there. And then we got this. So let's see what it does. We got 5 minutes to go. Final questions, guys. Appreciate you stopping by the lab today, by the way. You know, the market is what it is. It gives you what it gives you and takes what it takes. And nobody, you know, really, we don't know what it's going to do. So we have to kind of get over that part of it. This is the TraderLab community. Notice where we went. No way to know. High volume. Why wouldn't we go higher? We can. This is what's going on in TraderLab. There's a lot of posts. It's a community of like-minded traders who come together to leverage their collective experience. Takes a community. This is an advanced trading methodology. And like everything in trading, it's all random in the sense of how it distributes itself. But if you have a statistical edge, over time, you have the opportunity to extract dollars from the other side. This is our library of webinars. All this is available to you at no cost in the Bookmap TraderLab community. This is the primer webinar. Thanks, Ned, for curating this for us. Has about 34,000 views. It's a high-level overview of the business. This is called VPOC migration. This isn't important. The yellow line is the highest volume for the day. What is that telling us? What's above us might be too high. And this is the new retail price. So it's very possible, if we found too high, that we're now going to fall out the bottom. It's not a recommendation. We're in two-sided trade. It's rotational. Up to you whether or not you have an edge in it. Watch this one. Stop gambling, start winning. It talks about the business of trading and statistical probabilities. All this is available to you. There's a link in the bottom of YouTube if you're inclined. You can visit the TraderLab. All you got to do is verify your Discord username, and which is easy to do, and then find your way over to the Bookmap Discord TraderLab. By the way, there's a lot of additional education in the Bookmap server: stocks, options, crypto, order flow, of course, market maker behavior, swing trading, options, algorithmic behavior, market maker behavior, a lot more. And there's something for everybody, I guess. And the thing is, this process I'm sharing with you works in all fractals and time frames. If you're trading ETFs or anything, really, you can use this process. This applies to all markets that have liquidity. If it's not liquid, you shouldn't be trading it anyway. So this is actually the fundamental of the market. In other words, this is the basis of market mechanics. Same as when you shop in the store. If it's too high, you don't pay it. If it's too low, it's on sale, and it won't stay there, and then you find a fair price. The reason this is rotating around, it's looking for what's too high, what's too low, and what's fair. Right now, for the day, this is the fairest price. So the possibility is to come outside and maybe a return, or because of this buying, just come back to where we were previously. I don't know what it'll do. My job is only to wait for outside edges and try to get an alignment. I can trade either side, but the trend is up. Hope you got something from today. Remember, it's not about being busy. It's not about taking a bazillion trades. It's about taking intelligent risk and leaving the gambling to someone else. This is the 60 PDFs. You can download these. These are structured trades that I shared. They're not plug and play. They are ideas for you to reverse engineer to make it your own. In the end, you cannot replicate what anyone else does. You have to find your groove. Think of it like a musical instrument or speaking a foreign language. You have to find what resonates for you, extract metrics so you know where you have an edge and where you don't. And then over time, even though we all take stops, if you actually have an edge and you can execute it, that is ultimately what will potentially generate sustainability and profitability. Thanks for visiting TraderLab. Appreciate your time and interest. Please don't forget to give a like on the way out. Take care and trade safe.